New York, CNN Business. The runaway train on Wall Street has been derailed by a force nearly as powerful as easy money, a healthy dose of reality. The Dow plunged 1,862 points, or 6.9%, on Thursday in the biggest sell-off since March 16. Even the previously red-hot Nasdaq tumbled 5.3% back below the 10,000 level. The sharp selling was driven in large part by fears of a resurgence of the coronavirus pandemic that wrecked the economy. Several U.S. states that reopened weeks ago are now reporting rising infections and hospitalizations. Wall Street is unprepared for a potential second wave of the pandemic. It would completely undermine the extreme optimism about the economy that had catapulted U.S. stocks towards record highs. The rally in the stock market from the March 23 lows was simply overdone, said David Kelly, chief global market strategist at JPMorgan Funds. We are still in a very deep recession. We still have a tremendous amount of uncertainty about the virus but also about stimulus and politics. But you wouldn't know that from looking at the markets, which have surged even in the face of mostly dreadful news about the economy. Boosted by unprecedented stimulus from the Federal Reserve, the S&P 500 surged as much as 44% from the lows. The Nasdaq was up 46% and had already set new highs. The market is pricing in a V-shaped recovery. But what you really have is a huge slump, a bump and then a crawl until we get a vaccine, said Kelly. The surprisingly strong May jobs report, which showed an unexpected surge in hiring, raised hopes for a sharp economic recovery. But the Labor Department reported Thursday that another 1.5 million Americans filed for first-time unemployment benefits last week. The good news is that initial claims have dropped for 10 weeks in a row. The bad news is that claims are still extremely elevated. Prior to this crisis, the biggest weekly jobless claims figure was 665,000 during the Great Recession. In other words, claims are still rising at more than twice the prior record pace. Mass unemployment is going to be the primary condition that defines the economic narrative going forward, Joe Brusuelas, chief economist at RSM International, wrote in a report Thursday. Meanwhile, the coronavirus numbers have deteriorated in recent days, raising fears of a return of the health restrictions that caused mass layoffs in the first place. A second wave would slow the economy, hurt corporate profits and dent consumer and business confidence. Although trends in hard-hit states like New York and New Jersey continue to improve, there has been an acceleration of cases in some states that have already reopened. Coronavirus hospitalizations have gone up in 12 states since Memorial Day weekend: Alaska, Arkansas, Arizona, California, Kentucky, Mississippi, Montana, North Carolina, Oregon, South Carolina, Texas and Utah.